Welcome to This Explainer. Today, we're going to dive right into an unseen, totally self-reinforcing force that basically acts as the operating system for our entire global economy. It's a system we literally interact with every single day, yet we rarely stop to actually decode it. So, to kick things off, I want you to consider a bit of a paradox. What is the absolute most powerful weapon in the world today? What has the capacity to completely change fuel prices, swing global stock markets, affect local jobs, and even influence the geopolitical stance of entire nations, all without firing a single shot? Well, it isn't gold, it isn't oil, and no, it isn't even some piece of advanced military tech. It is the US dollar. And the totally fascinating thing here is you could live thousands of miles away from America, never visit the country, never even hold a physical dollar bill in your hands, and yet your daily life is heavily shaped by it. It literally impacts billions of people outside the United States. But think about it, nobody voted for it, right? There's no grand global contract demanding everyone use it. It really makes you wonder, how exactly did one country's paper become so overwhelmingly powerful? Okay, so here's our roadmap for This Explainer. We're covering 5 key areas. First, the power of trust. Then, how the dollar won, followed by the petrodollar machine. After that, we'll explore the momentum trap, and finally, wrap up with cracks in the foundation. All right, Section 1, the power of trust, diving into the underlying psychology of money. So there's a really surprising truth at the core of all this. Money isn't just paper. Imagine if tomorrow everyone in the world just woke up and decided your currency had absolutely no value. Your wallet would still be completely full, but your buying power, poof, vanished instantly. Money only works for one reason, because people share this collective belief that someone else is going to accept it later. That's literally it, just trust. And simply printing more of it doesn't just magically create value if the underlying confidence and economic consistencies aren't there. Actually, think about it like a pizza. If you have one pizza and you print, say, 100 coupons for it, well, the pizza doesn't get any bigger, does it? Real value depends on actual production, strong institutions, and reliable markets. Moving on to Section 2, how the dollar won. Let's look at its historical foundation. Right, so coming out of the devastation of World War II, the 1944 Bretton Woods Agreement essentially crowned the US dollar as the primary reserve currency. And at the time, it was backed by gold. As the American industrial engine just kept expanding through the 50s and 60s, the entire world's dependence on the dollar deepened right along with it. But here is the truly wild part. In 1971, the US officially severed the dollar's link to gold. That physical backing was completely gone overnight. Yet, the system somehow survived. Why? Because that global trust we just talked about, it was already totally locked in. And just look at the sheer scale of that historical victory today. When you look at central banks, they still overwhelmingly choose to hold the greenback. We're talking 59% of global reserves, which absolutely crushes its closest competitor, the euro, sitting way back at 21%. Back in 2007, financial heavyweights like Alan Greenspan were actually suggesting the euro might replace the dollar. But then, subsequent events, like the massive euro area crisis, really threw its stability into doubt, and that just ended up reinforcing the dollar as the ultimate safe haven whenever there's global financial turmoil. All right, Section 3, the petrodollar machine. Let's talk about trading oil for dollars. Enter the 1979 Oil for Dollars Agreement. This was, frankly, a brilliant geopolitical loop. Step 1. OPEC countries agree to sell their oil exclusively in US dollars. Step 2. Because of that, literally every nation on Earth is suddenly forced to hoard dollars just to buy the energy they need to keep the lights on. And step 3, those oil exporting countries take all those massive dollar profits they're making and reinvest them right back into U.S. Treasury securities. This incredible machine basically financed U.S. government debt and kept American interest rates remarkably low for decades. You can really see it in this massive historical data spike right here. Oil exporting nations aggressively recycled their crude oil profits right back into the American financial system. They weren't just stuffing giant piles of cash into vaults somewhere. They were actively buying up U.S. government debt. By doing that, they were structurally binding their own long-term economic success directly to the stability of the American dollar. It was a total win-win at the time. Now, moving into Section 4, the momentum trap, we need to look at the true cost of switching away from all this. Because it begs the obvious question, right?
If a country really wants to avoid American oversight of global financial networks, like the SWIFT messaging system, which the US Treasury heavily influence, why not just simply pick a different currency for international trade? Why on earth would they accept the constant risk of US sanctions?
Well, it's because the global economy definitely isn't a light switch. Honestly, it's exactly like trying to change the operating system on every single person's smartphone overnight. Staying with the dollar offers these highly predictable, extremely stable institutions and massive reliable markets. But switching? Wow. That means rewriting millions of complex global contracts, completely overhauling international banking systems, changing global pricing structures, and risking just massive economic confusion. It turns out the bigger a system gets, the harder it becomes to replace. In the world of global finance, this insane infrastructural gravity is called momentum. And let me tell you, momentum equals power. It just becomes a completely self-reinforcing loop.
And finally, Section 5, Cracks in the Foundation. Let's explore the geopolitical fractures happening right now.
Because here's the thing, structural de-dollarization is undeniably accelerating today. That core economic tie we talked about earlier, it's weakening, mostly because the US has drastically reduced its own reliance on Saudi crude oil. Throw in major geopolitical friction, plus the aggressive exclusion of certain nations from the SWIFT system, and suddenly the rest of the world is realizing that the dollar can absolutely be weaponized. So in response to that, a lot of nations are quietly starting to seek alternatives. We're seeing everything from growing Saudi-China infrastructure cooperation all the way to traditional allies like Egypt actually issuing bonds in Chinese yuan.
The global financial landscape is literally shifting right beneath our feet. And if history shows us anything, it's that financial power is actually incredibly fragile. Ultimately, it doesn't just follow military might. It follows human trust. When the trust moves, the money moves, for sure. So I'm going to leave you with a pretty thought-provoking question to ponder as we wrap up. If you were tasked with creating a brand new global currency tomorrow, knowing everything we just covered about momentum, stability, and shifting geopolitical alignment, how exactly would you build the world's trust? Definitely something to think about. Thanks so much for joining me for this explainer, and remember to always keep questioning the systems that run our world.